We have with us on the call today Mr. Vinod K. Menon, Mr. Anil Yadav, Mr. Rushabh Gandhi, and Ms. Swapna Vengrulkar from IRB InvIT team. As a reminder, all participant lines will be in the listen-only mode, and after the opening remarks by the management, there will be a question and answer session. Please note that the duration for the call would be 45 minutes, and any query unanswered after the call can be subsequently mailed to the management for adequate response and resolution. Please note that this conference is being recorded. I now request Mr. Vinod Menon to give an overview of the significant development during the quarter and year. Over to you, sir.
Yeah, thank you. A very good evening to all. I would like to welcome all the investors and analysts on this call. Hope you have reviewed our detailed numbers as well as the presentation. During the quarter ended March 24, we observed robust traffic growth across all our projects. As compared to the corresponding quarter of the previous year, we have observed 12.5% growth in the toll revenue on a like-to-like basis, that is excluding the Surat-Dahisar project. On an annual basis, the toll collection has increased by 10%, reflecting robust traffic growth across the portfolio. For Talegaon-Amravati project, we have witnessed positive recovery in toll revenue from February 2024, and the same has continued in the month of March 2024. We are distributing rupees 2 per unit for the quarter ended March 31st, 2024. This quarter, we will be distributing rupees 1.70 in the form of interest and 0.30 per unit in the form of dividend. With this, we have distributed rupees 8 per unit for the financial year 2023-24. This distribution includes the distribution in the form of interest of rupees 6.80 per unit, distribution in the form of return of capital of rupees 0.60 per unit, and a maiden distribution in the form of dividend of rupees 0.60 per unit. So
I will now present the financial analysis for the year ended March 24 compared with the previous year ended March 23. The total consolidated income for the year ended March 24 stood at rupees 1,086 crore as compared to 1,039 crores in the previous year ended March 23. The consolidated income for the previous year excludes revenue from arbitration award, which has been appropriated to the EPC contractor. EBITDA for the year ended March 24 stood at rupees 886 crores as against rupees 828 crores in the previous year ended March 23. Interest cost, which includes the interest on premium deferment for the year ended March 24, stood at rupees 272 crores as against 193 crores in the previous year. This is primarily on account of interest cost from the newly acquired HAM asset, which was acquired in the month of October 22. Depreciation, which includes the amortization cost for the year ended March 24, stood at rupees 230 crores as against 261 crores for the previous year. Profit after tax for the current year stood at rupees 373 crores as against rupees 370 crores for the previous year. I will now request the moderator to open the session for Q&A.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask question may press star and 1 on their touch-tone telephone. If you wish to withdraw yourself from the question queue, you may press star and 2. Participants are requested to use handset while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. We have our first question from the line of Dheeraj Dave from Samvat Financial Services. Please go ahead.
Yeah, hi. Thanks for providing me opportunity. My first question is basically what is the revision in toll? Like the presentation talks about 1st April 2023. So 2024 onwards, what has been toll revision? Hello?
Yeah. In terms of the toll rate revision based on the WPI as of December 2023, the rate revision will be close to 3.35 to 3.5%. And as you might be aware that Election Commission has asked to put a hold on tariff revision across India. And probably this tariff revision will happen once the code of conduct is lifted.
Okay. So we shall expect around 3.5% improvement post, say, June something, whatever is that post-election code of conduct lifted?
Yeah, June 1st. June 1st,
okay. So that was the first question. Secondly, just a kind of thing like, is there any specific reason why we are distributing? Are we keeping anything in reserve? Means basically, we have, what is the distribution percentage to NTDS for current quarter?
So it's more than 95%. We are distributing more than 95%.
Okay. And any scope to increase the distribution? Because, like, in fact, if we compare this to last year, it was 8.05 or 8.5 paisa. And we see since listing, while you are given a very good distribution considering the asset, but is there any scope where we can see some improvement? Even acquiring a HAM asset, actually speaking, has not moved distribution for the investor. Any view of management on this?
I think this year we have seen an increase in the interest cost across the project, or whether we have a debt at project level or InvIT level. So that has increased the outflow. And considering this year there will be increase in the collection, and we expect that the distribution will increase in this financial year. And to guide the exact number, probably you have to wait till Q1 of this financial year. And at that time, we will be providing the guidance for this financial year. But what I can assure you that this financial year, distribution will be higher as compared to the last year.
Okay, thanks. And just one suggestion, while we give in this presentation all the details, one slide if you can add, when basically what is the variable interest rate on our debt and what is the fixed. So proportion of fixed income and variable interest debt. And second is what is weighted average cost for year and or up to a particular quarter. If you can present that, that would be very helpful for us to evaluate. And wish you all the best.
Thank you.
Thank you.
Thank you so much. We have our next question from the line of Tanveer Suri, an individual investor. Please go ahead.
Yeah, hi. Am I audible?
Yeah, sorry. Go ahead.
Okay, so thank you for taking my question. So the first question I had was that in your slide where you show the gross income, project-wise gross income, is there any possibility to also show the HAM asset income that is received during the year?
Repeat. I think you are on speakerphone. Can you just switch off the speaker, because last portion we missed.
Okay, sorry. Is it any better now?
Better.
Yeah. So my question was on slide number 12, where you show the total revenue breakup. Any particular reason why we don't show the collection for the year through the HAM asset as well?
I think we have one slide for the HAM. That is the slide number 14. There we provide what kind of income we get from the HAM.
Yeah, but what I was asking was if you could show it as in the same in the gross toll connection. Wouldn't that just be easier to read from all the projects? How much toll connection we get or how much total revenue we get?
I think there we are disclosing the toll collection, and in HAM project we get annuity from the government. We have to suitably modify it to include this HAM distribution, HAM annuities, whatever coming from the government. We can basically create one more subgroup and we can disclose that.
Yeah, that would be better. And you all get the annuity twice a year, right? If I'm not mistaken.
Yes, yes.
Okay, and which month do you all get it?
First annuity in the month of October and second in the month of April.
October and April.
Yeah.
Okay, and sir, on slide number 18, your net distributable cash flow for FY24 is showing around 464 crores, whereas the net distributable cash flow working for the FY24 is showing 496 crores. So I believe the 496 crore number is correct, right? Is there anything that I'm misreading for the 18th slide?
The 496 number is correct. This is the actual cash distributed.
The 464 is what you're saying is the actual cash distributed.
Yeah. That's actual cash distributed.
Okay, so that is different. That is not the NDCF, what you're saying.
Yeah, that's true.
Okay. It should be good to spell out the difference then. It's just a little confusing.
Yes. We will specify that this is actual distribution.
Okay. Thank you, sir. If I have any questions, I'll get back in touch with you. Thank you so much.
Thanks for highlighting this.
Thank you, sir. We have a next question from the line of Mr. Saurabh, an individual investor. Please go ahead. Mr. Saurabh, are you there? As we are unable to... Yes, sir.
Hello, am I audible?
Yes, sir. Please go ahead with your question.
Yeah. Okay. Hi, everyone. Thanks for taking my call. So, taking my question, rather. Sorry. So, how much cash do we have at the trust level currently?
As in March 24, the closing.
Yeah, I mean after distributing after distribution, like how much cash we will have?
I think that surplus distribution excluding the DSRA will be 15 to 20 crore rupees.
Okay. Now, related to this, right, I mean, this is inconsistent. I think we have 15 to 20 crores always from quarter to quarter that I see, And if we go back last year, it was 8.05, right? I mean, the DPU for the whole year. This year it is 8. So what has, and we say on one hand that we, the revenues or the toll collection has increased by 11%. So, are we saying are we saying because of the financial cost almost 11%, the DPU has not changed. So what gives? Is it the financial cost that has eaten this up?
Yes, so I think you are absolutely correct. If you look at the interest cost, what we have paid last year was 193 crores, and this year we have paid 272 crores. So almost roughly 80 crores of higher interest we have paid in this financial year. Your observation is...
So basically then, in the last call, management has informed that you will be taking certain steps to obviously refinance this. Can we, what is the interest? Is it a floating rate that we are paying? Is it can we give that guidance? Like how much interest, what is the rate of interest that we are paying currently?
I think currently the weighted average rate of interest is around 8.65 to 8.7%.
Okay, because we are AAA rated, so I was and 8.65 is still decent. And last year what it was?
Last year I think it was sub 8, close I think 7.8 or 7.9. We have got almost 100 basis point increase over 1 year.
Okay. And with refinancing, what we are trying to achieve? As in, how much reduction are we expecting?
I think apart from the interest rate reduction, definitely our endeavor is to reduce the interest rate. And secondly, what happens as of now, the rates are linked with the various benchmarks. We have different lenders, and different lenders have different benchmarks. And as we are foreseeing that going forward the interest rate will start reducing, and different lender will have different time frame to reduce their MCLR. So then the full impact will not flow to the InvIT. And to have one lender at a trust level, we are trying to refinance the entire debt with one lender. One, we will save some cost, 20-30 basis point cost in the refinancing itself. But if you look at on the long run basis, if you have one lender, typically where the MCLR is typically given the adjustment on priority, or the bank which is first in terms of to move lower the MCLR once the RBI reduces the rate. So having that kind of lender will definitely help the unit holder and the trust to reduce the interest cost in the future.
Okay, so basically we are elongating the tenure, right? And that will also help, and also with one lender we want to have some 30 bips of saving. Is that understanding correct or fair?
So upfront I think 20-25 basis point of interest saving, and plus we will have further benefit coming because of the one lender. And third thing, as you rightly mentioned, the tenure will also get elongated.
Okay. Thank you very much. I'll get back in queue.
Thank you.
Thank you, sir. We have our next question from the line of Dipen Shah, a shareholder. Please go ahead.
Yeah, thank you for the opportunity. I had a question on the acquisition of new projects. We have spoken in the initial remarks that we will be looking at new assets probably in FY25 or maybe FY26, because the sponsors' assets are actually becoming operational in the current year. I just wanted to understand, apart from the sponsors' assets, are further assets available in the market at good IRR? And what are the current level of IRRs at which the deals could happen? So just wanted to understand, how should we look at asset additions apart from the sponsor assets in the next 1 to 2 years? Thank you.
I think in terms of asset addition, the IRR will be definitely one yardstick, but one has to also look at what kind of assumption is there to basically to reach that particular IRR. If it is toll asset, then one has to look at what is the traffic increase, what is the tariff increase assumed, and what is the cost of debt and the O&M considered. So that because if you have one is considering very high traffic growth and high inflation, then definitely the IRR may be higher, but it will be difficult to realize that particular IRR. And for annuity assets, as you are aware that interest rate everybody is talking about, we are on peak of the cycle. And with respect to the annuity asset, if I acquire the annuity asset on the current level, further in future NHAI's payment of the interest is linked with the RBI bank rate. And if the bank rate reduces, then automatically the interest coming from the NHAI will also reduce. So while evaluating for the project, one has to look at the other variable like interest cost and what kind of O&M one has factored. Because if the O&M is not properly factored, and then definitely there will be additional cost going forward, and which will basically have an impact on the payout. So definitely, so far we have already evaluated more than 30-35 project third-party assets. We have given offers also for some of the assets, but so far we were not the expectation of the seller and our expectation, we were not able to match that. Going forward, also we will evaluate whenever the opportunities are available. And if it will make, as we are in fiduciary capacity, we will make our effort to add the asset only when we are sure that it will not be detrimental to the interest of the unit holder.
Okay, and thanks for the reply. And how about the sponsors' assets? Do you expect them to come at a good level or good within the benchmarks, or there also we need to compete with others? How does the situation pan out over the next 1 to 2 years?
So I think the sponsor has 3 assets which will be available in next 2 years. And for a sponsor, O&M will be agreed upfront. So whatever the O&M unit holders agree on that particular price, the sponsor will, since the asset is constructed by the sponsor will underwrite the O&M amount. So the one variable in the HAM asset will be over. And since this asset will be added over the period of 2 years, by that time we will also see a rationalization of interest by RBI. So that will also stabilize what kind of interest we are going to get from the NHAI side. So that will rationalize both the variable of the HAM. So then whenever we add the asset, definitely it will add to the payout to the unit holders.
Okay, thanks very much. I will take it further maybe subsequently. Thank you so much and all the best.
Thank you.
Thank you, sir. We have our next question from the line of Mr. S.N. Ranjan, an individual investor. Please go ahead.
Yeah. Good afternoon. Congratulations on a good set of numbers and your encouraging remarks about next year's distribution also. Two questions. One is, I think our NAV should be in the region of around 101 or 102. I have to find it here. Is that something that...
Mr. Ranjan, your voice is breaking.
Is it better now?
No, sir.
Is it better now, sir?
Yeah, Ranjanji, you go ahead. We are able to listen. If you will miss out something, we will let you know. Please.
Okay. My name is Rajan.
Oh, sorry. Extremely sorry, because of the disturbance in voice, I was not able to.
No worries. I was just thinking our NAV should be close to 3 digits. And is there anything that the management is trying to look at this huge discount of NAV to be fair value? I mean, other than the promoter having bought shares recently after about 2020, that is individual capacity, whether it's done. And my second question would be, is there an average assets in the region around 15 years? What would be the average duration of the total debt of the company?
So I think if you look at the InvIT, it's the total duration of the InvIT is around 15 years. And in terms of the per unit value is close to 98 and a half. So that is the broad aspects in terms of the life of the asset and the per unit value.
Yeah. My question is there any thought on this huge discount that we are quoting to NAV? Anything that can be done? I mean, if it's a company, you would have talked straight away about a buyback or something. So I mean, I'm just asking you, have you ever explored?
I think the InvIT basic premise for formation of the InvIT and the object the InvIT is run is to pay out to the unit holder. And if the InvIT decides to buy back, then definitely all the units cannot be bought back. So then whatever the unit we will buy out of the what we are distributing. And that is not the aim or objective of the InvIT. And in fact, InvIT regulation also does not permit that, because the aim is to distribute to the unit holder. So that buyback is not feasible. What we are trying that we should try to increase the distribution so that the trading price should reach to a fair value of the per unit.
Okay, got it.
Thank you, sir. We have our next question from the line of Shrish Vaje from Money Life Advisory. Please go ahead.
Thank you, sir, for the opportunity. Am I audible?
Yes, please go ahead.
Yeah. So my first question pertains to the acquisition of the 3 HAM assets that you are envisaged from the promoter. So I just wanted to understand, would you be able to complete these acquisitions fully funded to debt, or would you also require to raise additional equity to fund these three acquisitions?
I think based on the current limit available, we can fund it through debt also. But whenever we decide to acquire the asset, when we will reach to the closure, at that time we can decide the modalities. But what I can say that the trust has adequate capacity to acquire these three assets with the debt only.
Got it. Like the reason why I was asking is because we are quoting at a high discount to NAV. So in that case, sort of using equity as an option may not be sort of in the best interest of unit holders. So that's why that was the main reason. The second question is regarding our total debt right now. So can you just give us a breakup of what percentage of our total debt is fixed and what percent is variable interest?
I think, as you rightly mentioned, we are today 0.3 times of the total size is the debt, and we can easily go up to 49%, and even with a AAA rating, we can go up to 70%. So then definitely, considering we are trading at discount to our fair value, our endeavor will be always to add asset through debt so that the unit holder does not get diluted. Now, with respect to the debt amount, I will request Rishabh to provide the same.
The outstanding debt is 24 billion, and that's entirely variable.
Okay, got it. Thank you, sir.
When we say the variable, it's a typically 3 months or 6 months linked with the MCLR. So once 3 months, automatically after 3 months there will be a change of the rate, and some are linked with the 6 months MCLR. Then after 6 months there will be change of the rate.
Got it. Thank you, sir.
Thank you, sir. We have our next question from the line of Satinder Singh from Eon Infotech. Please go ahead.
Yeah, thanks for the opportunity. So I have a few questions. Mr. Menon, if you could give us a visibility on how the dividend component will move. Like, so what's the kind of exit dividend for this coming financial year, March 25? What kind of a dividend component we see out of the total payout?
So I think our endeavor will be to pay close to 1.5 to 2 rupees by way of dividend or capital reduction. Probably large portion of that will be in form of dividend. And this year we have paid 60 paisa as a dividend, which is tax-free for the unit holder. And next year definitely this amount will increase in range of 1 to 1.5 rupees will be in form of the dividend.
Okay, right, sir. And your Jaipur Deoli traffic has seen a very smart recovery over the last few months. So,
hello?
We lost you for the last part.
Hello?
Just a second, sir. I am checking. Just a second.
Hello?
Go ahead.
Hello?
Go ahead, sir. We can hear you.
Hello?
Yes, sir. Go ahead. We can hear you.
Sir, so this was regarding Jaipur Deoli, sir. We've seen a very smart traffic increase compared to the year before, okay, and this has been sustained for the last almost 7-8 months now. So what are the reasons for this, and do we see this as durable, please?
I think as Jaipur Deoli, initially we have faced some challenges with respect to mining ban. And as we have talked about in the past also, the government has started in the scale manner, started allocation of the mining. and now the mining traffic is back. So considering that, we have seen an improvement in terms of the toll collection.
Okay. And so do we see some more traction, or is mining fully back? Okay.
I think 80-90% is already back. We may get some traction, but that may not be that substantial.
Okay. And about Talegaon, Amravati, so we've seen recovery in Feb and March. So are we back to normal on Talegaon, Amravati in terms of those road closures, or do we have some distance to go on this, please?
So we expect that the road closure has been completed, and now similar trend should continue in future as well.
Okay, right. And what is the contribution of the VK1 to the total distribution in FY24? So net of the interest costs that we pay out for the loans we've taken, what is the net contribution to the distribution in FY24 from VK1, please?
I think close to 50 paisa VK1 has contributed in FY24.
Okay, so about 29-30 crores would be the contribution.
Yes.
Okay, fine.
And expect to increase slightly for the next financial year, because earlier envisaged there was 15 crores increase in DSRA. The project should have contributed around 35-40 crores. As against that, 25-30 crores was contributed. So next year, again, we expect around 40 crores kind of contribution from the VK1.
Okay, fine. And what is the deferred premium of TC Tumkur Chitradurga as of 31st March?
It will be close to 650 crore, including interest on premium deferment.
Okay, 650 crores. Okay. And regarding this traffic, sir, normally in our growth, the valuer estimates about a 5% increase in traffic and about a 5% increase in tariff for a cumulative revenue uptick of about 10%. So this time the tariff increase is going to be about like 3.5% only on an average, as you mentioned. Do we expect to pick up the slack from traffic, or do you feel there might be some risk here on this count, okay, because of the lower WPI-based tariff increase?
I think considering the general election, the traffic momentum should be good in this financial year. And on the backdrop of the same, we should be able to do close to 10% growth, 9.5 to 10% kind of growth in this financial year also. And we are quite hopeful for the same.
Okay, right, sir. And when are the valuation reports expected? So that's probably it should have been done already by now, we guess.
Yeah, it should be uploaded shortly. It will be uploaded shortly.
Okay, fine. Thank you very much. All the best to you.
Thank you, sir. We have our next question from the line of Sarvesh Gupta from Maximal Capital. Please go ahead.
Sir, most of the questions have been answered, but just one bit. So this year, broadly, we saw around 10% increase in revenues. Yet, I think the effect of it was eaten up by finance cost increase because of our yield that we had to pay to the banks. So now, considering worst case, interest rate remain as it is, and given that we are projecting for, let's say, closer to 10% growth in the overall revenues, a mix of traffic and inflation, so can we expect at least 5% or 6% increase in the DPU in the coming year?
Definitely, yes. Our endeavor is to pay even the increase will be higher, but definitely the DPU will increase by 6-7%.
Understood. And this will also, the increase which will come, a major part of it should come in the form of exempt dividend. Is that the right understanding, sir?
Probably, yes.
Understood, sir. Thank you and all the best.
Thank you. Thanks.
Thank you, sir. We have a follow-up question from the line of Tanveer Suri, an individual investor. Please go ahead.
Yeah, hi. Thanks for taking my question again. So, so we said that on slide number 18, instead of that NDCF is the cash that is being distributed actually. So, in FY24, we are distributing a slightly less cash, although we have made more net distributable cash flow, which is like as compared to FY23. So your optimism of increasing the DPU and this year being better, is that is there any is that an indication that we may dip into the reserves, or we would not be dipping into reserves for distributing for the distribution for the coming year?
I think our endeavor is to pay out of the cash generation, and ideally we should not dip in the reserves.
Okay. So it is so it's purely out of the traffic growth and on those levels, right?
Yes.
Okay. Thank you so much.
Thank you.
Thank you, sir. I now hand the conference over to Mr. Vinod Menon for closing comments. Vinod, sir.
Yeah, sorry, I was. Thank you very much, all the investors and the team, for joining this call. And we would take all the rest of the queries on the mail, which my team would be very happy to reply. And thank you very much.
Thank you, sir. Ladies and gentlemen, this concludes your conference for today. We thank you for participation and for using ResearchBytes conferencing services. You may please disconnect your lines now. Thank you and have a great evening.